when you look at the kind of development we are planning to get into, we are somewhere, let's say, about close to 60% debt, which leaves very small room to borrow more money to do our project. So we have a few things that we're thinking about. One is to restructure our balance sheet so that we can have a little more cash from our shareholders. Secondly, we are looking at a situation where some of the projects that we will be doing, we would like to do them together with private investors using the PPP, that is a public-private partnership model, which is being encouraged by the PPU unit at the National Treasury. And as a matter of fact, we've already identified a project, a geothermal project of 140 megawatts. We call it All Carrier 6, which has been targeted for development as a public-private partnership.
Going back to the cash call that you mentioned, government is your biggest shareholder right now, and to put it mildly, they're having cash flow problems, very well publicized cash flow problems. And at the same time, they've got quite a few state-owned enterprises or enterprises in which the government has a stake that in one way or another either need debt or credit guarantees or an infusion of capital. Chumi, Omeo Sugar, Kenya Airways, of course, also does come to mind. Might it not be difficult for you on the board to then convince Treasury, look, we've got to put money into the business?
KenGen has got some long-term debt where government borrowed money like from some DFIs and has on-lent that money to KenGen. And we are thinking that government could convert some of that debt into equity.
I saw a 20 billion or so amount of convertible debt that's on your balance sheet. Is it going to go beyond that, or is that the limit?
Well, so far we've discussed up to about 20 billion.
I noticed by the end of the last fiscal year, you'd managed to reduce your short-term debt, the ones due with a maturity of less than a year, by about a third to about 9.4 billion shillings. From a financial perspective, is your strategy to try and reduce your short-term debt as much as you can in order to avoid the hit from interest rates, especially once KBR starts going up in the next revision in, say, another 2 or 3 months?
One of the reasons we're doing that is really to manage our cash flow. Because when you have short-term debt, then you have this issue of having to pay quite a lot of money within the 1 year. So we came up with a strategy where we said, because some of this money we have used it to finance long-term projects, it doesn't make sense to be doing it on overdraft. So we went and approached some banks and looked for 7-year money and were able to convert the overdraft to a bit of a long-term loans that then help us to manage our current assets.
And all of that is denominated in Kenyan shillings, or it's a mix?
No, this was Kenyan shillings.